All right. Good morning, everybody. I'd like to welcome everybody to the workshop today on corporate compliance and regulations. Thank you for taking out time to join us this morning. I know we have a whole lot that we're looking forward to, and I can guarantee you one thing, that you're definitely going to get value for your time today. Just as we get started, while others are registering also, I'd just like you to use the chat box to simply type where you're joining this workshop from, if you don't mind. Wherever you are, just like wherever you are, because it's a global call. So we just want to have like an overview of where our audience are coming from. So you could just use the chat box and type where you are live at the moment. Yeah, I can see Lagos, Nigeria. Ola. Okay, thank you. CG from Nigeria. All right. Okay. All right. All right. All right. I know more people would I think we have just like a minute. Okay. Moreni Keji Uni, thank you for joining from Lagos, Nigeria this morning. Okay. Obot Okana from Ibiono. Ibiono, is that Akwa Ibom? Thank you for joining also. Thank you. All right. All right. So I'll go next to it by giving us a very brief introduction about RACE. So thank you once again for joining. So RACE is the Pan-African company where, okay, thank you, Jane Karanja from Kenya. It's good to have you, Jane. Thank you for joining us this morning. Yeah, it's afternoon already, that's why. Yeah, thank you. All right, so RACE is the go-to platform, Pan-African company when it comes to equity distribution, in terms of tracking your equity, in terms of transacting, and in terms of transferring equity across board. RACE is that company that gives you the all-in-one go-to platform. And this is what we do at RACE, making sure everything that has to do with your cap table and equity is very clear for you to understand. All right, I would hand over now to the Crestall team for the introduction, and then we'll take it up from there. Thank you, please.
Hello, everyone. Good morning. My name is Ifeoluwa Durobelu, a partner at Crestall Attorneys. You can see on my shirt. We're a law firm that represents startups in all fields, but particularly in tech and entertainment. With me here today are Mr. Akinwumi Adebare, one of our partners, who would be handling the question and answer session. He's waving his hand right now. And for now, the knowledge sharing session will be handled by Mr. Adebayo Fabamishe, our managing partner. Mr. Adebayo, over to you.
Okay, good morning, everyone. I think afternoon in some places. Yes, so like I said, my name is Adebayo Fabamishe. I'll be taking us through today's knowledge sharing session. I hope I am audible enough. Yes, so let's get into that. So today's session really will be talking on three important areas in compliance. Compliance is a very wide topic, but we will limit our discussion to three important areas, which is the corporate and regulatory compliance, data protection, and KYC, know your clients, or AML compliance. Yes. So, but of course, before we go deep into what we are doing today, there is a poll. There is an initial poll to understand essentially what areas we should focus on. So please answer the poll questions when they pop up. Okay, I think we're done. Okay, no. Second question. Okay. Thank you for answering the question. I think we can proceed now. So, okay, let's start with compliance in itself. What essentially is compliance? Compliance refers to the way in which a company ensures that they are following both their own internal compliance structure or playbook structure and the laws and regulations that apply to them, that applies to the business or the industry where they partake. So what essentially, when we say internal and external structure, what do we mean? Internal structure refers to, the measures to ensure minimum standard of quality and operational oversight. So when you're talking about the management and the board and the powers that these structures have, who takes certain decisions, what decisions are taken, who is in charge of finances, all these are internal compliance mechanisms. While external compliance is much more is what we refer to as regulatory compliance. This is compliance, the company's compliance with state or federal laws, as the case may be, that are applicable to that business, to the company generally, or to the specific industry where the company operates. So when you're talking to compliance, there are certain steps you have to take, right from pre-formation. Before you incorporate your business, there are certain steps you have to take to ensure that your business, is able to scale through its formation and the initial hurdles. So what we have is a pre-incorporation checklist. What the pre-incorporation checklist does is it helps founders make certain preliminary decisions before going into the business. Some people say, oh, what are the preliminary decisions you have to make before founders come together and start the business or organize the business? Well, I'll just give you a few of them and just highlight them for you. The first one is agreement on intellectual property ownership. So the essence, the bulk of what a company is or a startup is intellectual property. Software itself, the design are all considered intellectual property. So the founders, before incorporating the company, may have started work on the product, on the company's product, and then of course started development. If possible, may have even launched before then. But what happens where the company is then incorporated, but the company is not the one who developed the software as it were. Then there has to be an agreement that upon incorporation of the company, all existing intellectual properties that are vested in the founders will be assigned to the company. That's the first decision that has to be made, that the founders do not own the software individually based on their contribution, but the company collectively will hold that intellectual property or the ownership of the intellectual property in the product. That's the first agreement that has to be reached before you even start development. Then time and money contribution of the founders. The founders have to understand, some founders are financial founders. They are not technical founders. While some are technical founders who dedicate time, while the financial founders dedicate, funds. The roles of each founder has to be ascertained. Their contributions to the venture has to be ascertained. The compensation and equity allocation based on contribution, that also has to be, ascertained before you start development. Then vesting. I'm sure we are all familiar with the vesting. Stipulated 4-year vesting, 1-year cliff with respect to equity allocation and entitlement to such allocation. The vesting period has to be agreed upon. And what we usually advise is that there is a provision that if an investor comes on board and has a requirement that the shares should be revested, then that, upon agreement by the company, the shares of the initial founders and every other equity owner would automatically be subject to revesting in line with any future fundraising. That's a clause that a lot of people avoid, but it could also affect your fundraising chances when, certain investors come on board and they say, no, what we require is a 6-year vesting or a 7-year vesting period for founders. Then, of course, the most important part will now be the capital structure. What essentially is the capital structure? What do we need to agree with respect to capital structure? Capital structure essentially oversees the finances of the company with respect to, of course, ownership and cash flow. It is through the capital structure that you're able to ascertain, that you're able to derive your funding and then divide the areas of funding, whether you're going through equity, whether you're going to raise equity capital or you're going to raise, you're going to go through fragmented loans or other loan financing options, or even possibly debentures, or predominant to the investors preferred shares. There's also a stipulation with that. All this is contained in your capital structure, and that is essentially what has to be agreed from the onset. Then, of course, before you file, you're also required to provide what we call the articles of the company, which guide the operational structure of the company, the meetings of the board, the management, and all other decision-making processes in the company. They are usually default articles which a lot of people adopt, but in instances where you require specific articles, you're not meant to take the default of the draft articles outline and tinker. You can then make just approach a lawyer to make custom provisions for you in your articles to meet your peculiar needs. And finally, you have to agree on who the company's officers will be, the directors, and of course the CEO, all other fancy titles that are likely to give out from the onset. There's also a system of maybe you should hold off on giving out fancy titles until after there is transaction and then people have settled into their roles in the startup before you then allocate permanent positions. But of course, that is left to the decisions of the founders collectively. So that essentially is what you have to go through the structural checklist. So with respect to how important the capital structure is, some people think the account table is just stipulate how many shares each individual owes, but it goes much more than that. It is your cap table that determines how much shares you're able to give out at every series of fundraising. It's your capital structure that determines whether the differences between the shares and then the rights that are attributed to those shares, whether they are ordinary shares, which is the standard equity, or they are preference shares, which have certain rights attached to them. So that is how important the capital structure is, and also, of course, a determinant for raising funds, most importantly. So it's very important that people take cognizance of the capital structure. What determines the capital structure? What should you take into cognizance? You'll be looking at things like your cash flow position, certain market conditions. Some industries require a minimum standard when it comes to the capital structure or the share capital. You also have to consider that the applicable tax rate based on your capital, on your share capital, then of course, size of the company also matters a lot. And then, of course, for control reasons, if the founders want a special control, then they need to, of course, fragment the cap table and then assign preference shares with certain voting rights to themselves and to as original investors. Are supposed to be, which is called corporate governance playbook, which guides essentially all these agreements on the operational structure of the company. But corporate governance really is much more a business management aspect, because it governs the rules, practices, and processes by which the company operates. And essentially all the corporate governance playbook is very important as it delineates the levels of the decision making between founders or management officers. So let me just ask a quick question. What do you think are the necessary qualities of a board member? Can anyone answer that question? You can raise your hand if you want to answer, if you want to contribute to the conversation. Okay, no one? Oh, well, really. So the board essentially is the most important corporate governance arm in the company, because the board itself oversees the entire the entire legal and regulatory operations of, okay, someone is asking for a question. Yeah. Okay, so the question is, what do you consider, what do you think are the important qualities to look for in a board member that when allocating board seats? Yes, so like I was saying, the board obviously is the most important arm, as they determine the operations of the company. They determine the direction in which the company is to go through. Certain factors obviously shape what, the size and composition of the board. The first is what we call the, yes, industry, okay. Chinedun, thank you for your response. So I will get there essentially. So the first one is what we call legal and regulatory obligations. With respect to regulatory obligations, there are certain industries where people operate, for example, the financial sector or the investment sector, where the regulatory agencies have certain minimum standards that every company in that industry has to comply with. This standard obviously includes who can be the CEO of the company and the board members of that company. There are certain minimum numbers of qualified individuals that have to be on the board of that company. So when you're playing in that space, then you have to consider, okay, do we need 2 qualified people? How many years of experience in this industry do we need? What qualifications does this specific board member, what does he need for him to be a qualified board member? You have to consider the regulatory obligations applicable to the jurisdiction, because they are not universal. They're applicable to the jurisdiction where you're carrying on business. Then another important aspect is the ownership structure. For the sake of control, some members like to have, some owners or shareholders or investors, as they were, like to have some level of control and usually request for board seats. We also have to consider that of course majority shareholders may require that you allocate board seats to them so that they have an interest and they're able to protect their majority shareholding. Then expectations and interests of key stakeholders like employees. Some companies usually allow for employee participation on the board because the decisions of the board also affect employees. So you also have to consider that when allocating board seats. Then the company's attributes, the size and the culture of the company, that is also important. You cannot have a 10-man company and then have 5 people as your board members. It just seems like an unnecessary or an expensive imposition in the real sense. So some people would always say, look, if I'm a founder, why can't I be a board member? But then the truth is, even if you're a shareholder, there is no compulsion, there is no requirement that says you have to be a director. Why can't I be a member of the board? You don't have to be. Because the truth is, if you're in a regulated agency and you do not qualify, you do not have the specific qualifications to hold a board seat in that industry, then you have to take a back seat, for more qualified members to actually take up management control in the company. Even if you have some substantial shareholding, what you may be allowed to do is maybe you would nominate the qualified person to actually sit on the board. You may be allowed the power to nominate such a person to the board. So of course, the general qualities that you would expect: integrity. Integrity is very important, and it's very hard to find. People that would have the best interest of the business at heart, and the long-term interest of the business and growth projection. Competence. Competence is also very important, as like Chidubin said. Competence is also a very important thing. How good is he in making decisions? Does he understand the business landscape that you're trying to operate in? A lot of all these factors are very important. Competence is partly a big one. Then independent. Is he someone that votes in his own right, or can he be easily swayed by other board members, or can he stand on his own and then make his point, deliver his point, and then stand on the best course of action? Accountability is sort of big, but we have to know that there is still the oversight of the shareholders, where where a director has exceeded his powers or is deemed incompetent, then he can be called. It can be called by the board, by the shareholders general meeting, or removed, as the case may be. And then, of course, transparency, which goes with integrity. They both go hand in hand. And in this Nigerian landscape that we operate in, some of these qualities are very difficult to come by. But the truth is, there are certain people that you can, point out and say, yes, this person suits this position specifically. So why is the corporate governance table very, very important? Well, like I stated, the rules, the authority, and the timing of decisions, are stipulated specifically. And then it forestalls further disputes. One of the members does not come up and say, oh no, you shouldn't have done this. If there is a corporate governance playbook that says you are allowed to carry out certain acts, then you can't carry out certain acts. And of course, this playbook is usually agreed upon by the shareholders and the board upon formation, so that it guides, the entire operation of the company. If you have this sort of playbook, and then which specifically states the powers of everybody, when investors come around and they say, look, are we sure that operational things are going to be done properly, then you can as well, of course, give them access to your corporate governance playbook that specifically delineates, the decision-making, the responsibilities, the levels of authority, and the timing of decision-making across the entire business. So, certain powers may in fact be delegated to the CEO, for example, but then his delegation will be limited. And then certain acts that needs to be done has to be carried out, has to be assented to by the entire board. And then of course the powers of the board will also be limited to that of the shareholders, as the entire members in general meeting. So this corporate governance will be that guides the entire process. So yes, let me now move on to a very technical aspect, which is regulatory compliance. Okay, I think you have a chat box, so you could indicate what you feel is the preferred way of building a product, whether to build first and comply later, or you think building around regulation is the preferred approach. You could just indicate what you think is the best approach when navigating regulatory landscapes. So, but why is regulatory compliance a thorn in people's behind, as it were? The truth is, the government has a duty to protect. They have a statutory duty to protect not just businesses but also the society at large. So, public policy demands that the government or the regulatory authorities put in certain, safeguards to ensure that business operations are done properly, and the activities of their customers or users are protected from the activities of corporate entities. A case in point really is the Nigerian system, the new increase in flight fares, which the Federal Consumer Protection Agency has come against and said, look, it is in breach of regulatory mandates for the airlines to fix prices. So a lot of all these things are not generally bad, but some of them are just based on public policy objective to protect users. So, but why is compliance very important? And usually, I read fund that says, just build. Yes, we can ask for forgiveness, not permission. Well, that could be a very expensive approach to take, and it could really, spell doom for the startup. Recently, there's a Ghanaian startup which the CBN has told, the Ghanaian fintech with the CBN has told to stop operations just a few years. They raise products are launched without consulting with the regulatory agencies, and that is why the regulations themselves play a very important role. Building around regulation initially, but subsequently you have to ensure that compliance with these regulations also takes a forefront. A way you can actually build around regulations and ensure compliance is by having a qualified lawyer who knows that the regulatory landscape around which you're building, sit during the developmental stages, while the product is being developed, so that you can obviously advise around certain tricky areas. So regulatory compliance itself is just to ensure that you are in line with public policy objectives and the rules and regulations of government as well as sector regulators. So, but what are these areas that you should keep abreast of when you are when you're starting up or while you're doing business operations? The first one are corporate filings and books. Okay, yes. So in your responses to the chat box, and I will be able to see that and recognize it. So you can have to take cognizance of this compliance. I mean, they seem as straightforward as possible. When a company is incorporated, there are certain. Okay, sorry. Let me slow down a little. When a company is incorporated, there are certain filings that regular filings that need to be done with, the corporate. There is the annual return audited account that has to be filed, and of course the payment of the Delaware franchise tax that.
Hi, everyone. I think Mr. Adebayo is having some network challenge. Let's just give him some time. He's going to join us back. But in the meantime, just in case. All right, he's back. But just in case, before he continues, you have a question, feel free to drop those questions on the chat box and he'll pick them once he's done. Thank you. Mr. Adebayo, over to you, please.
Okay. Yes. So let me just, like I said, the corporate filings really have to be done on an ongoing basis. Then taxes and audited account provisions, like the idea indicated the Delaware franchise tax, then you have to consider your corporate income tax filings, which is applicable to the jurisdiction where you carry on businesses. For some countries, even if you do not have a presence there, provided you're making money, you receive revenue from that company, from that country, you have to file tax returns and also pay taxes. So you have to be aware of the tax provisions of every jurisdiction where you carry on business, where your customers reside, so that you're able to keep abreast of tax regulations as it were. Also, industry-specific regulations. So that is in what we consider regulated sectors, like I earlier mentioned, financial services and obviously investments. These are highly regulated, regulated sectors that have very bulky, specific, rules that one has to comply with. So you have to be aware that, so that you can be aware of all these requirements that are applicable to that. A very important one that a lot of people overlook is employment regulation. Because now we are in the era of remote work, a lot of people are working. A lot of people are working from wherever they are located. So in that regard, you have multinationals as employees, and then the company may be paying out funds to them without actually taking cognizance of the specific employment requirements that is applicable in their jurisdiction. The lucky thing really is that most employment regulations are, are codified in the International Labour Organization's conventions, and protocols. So once you are able to comply with what we consider international best practices, you may be covered in certain areas. But in Nigeria, for example, we have specific regulations like contributory pension scheme, which employers are supposed to pay into contributory pension scheme. So where an employer, for example, does not pay into that, it runs foul of the pension of the Pensions Act. And then, of course, there are certain liabilities that are ascribed to not paying into the fund. So you have to be abreast of the specific employment regulations where your employees are located, because non-compliance is not just going to offend, of course, the regulators, but it could also adversely affect, the employment relationship as it were. So let's move on to the next aspect of the second aspect of today's session, which is data protection. I'm just going to be very brief with data protection, because if we decide to go in depth into data protection, we will be spending hours just being, but I just want us to understand certain key aspects of it. So personal data, what essentially is personal data? Personal data is any information relating to an identified or identifiable natural person. So this has to do with name, identification number, email address, phone number, any other online indicators, that can be linked to that personal data, even as far as race, culture, tribe, any other. Unidentifiable. Data subject essentially, data subject reference to personal data. So when you have someone individual, that individual is the data subject. I hope you can hear me better now. I think the network is
sorry, Mr. Adebayo, can you please just start over a bit from the beginning? Your connection went really down, so I don't think participants got that.
And data controllers are two. Okay, from data protection.
Yes,
okay.
from data protection.
That's from what essentially. Okay, thank you. So with respect to data protection, there are certain, terms that one has to be familiar with, and that is essentially what guides compliance with, data protection regulations. So what are these terms? The first one is personal data. Personal data essentially is any information relating to an identified or identifiable natural person. So this information, relates to the name, date of birth, email address, location, anything really, even as far as complexion, race, tribe, since genetic makeup, anything really that can be linked to an individual is considered personal data. Then who is the data subject? The data subject is the individual, that this personal data relates to. That's what we consider a personal. That's what we consider a data subject. So data processors and data controllers are two areas that are also very important. They could be one person or they could be separate entities. So a data controller is the person who collects, personal data, the information. It could be the startup when you are the onboarding stage where you collect certain information, or ongoing where certain information is given to you during the course of the relationship. Then you are from the users or customers, then you are the data controller. Then the data processor is the third party who makes use of that information for whatever reason. A very important aspect, which I think everybody would understand, is a very important area which I think people would understand is, let me give you the Facebook example. There was a Cambridge Analytica scandal. So Facebook essentially collects information of its users, and then Cambridge Analytica processes that information and uses it for whatever purpose, for the purpose it deems fit. So that is where data protection issues then, then come up, whether the data controller is entitled to give the data processor that information, whether the data processor is even allowed to use that information, or process that information for its purposes. Well, there is also the instance of, like I've been informed, yes, business companies and business data. Yes, essentially, information you get from your users is what we consider to be personal, to be personal data. So then, what is consent? A data subject, ought to give an unequivocal right to the data controller or data processor to actually make use of that data. And when we are saying consent, consent is a freely given, specific, informed, and unambiguous affirmation that it consents, that the data subject consents to the processing of his personal data. So, without getting this consent, then any processing or the use of this information is, in the real sense, unlawful. And that is why you will see when you go to websites nowadays, you see that they tell you also always have to consent. You either accept all cookies, reject all, or give specific, or amend your consent specifically. So this requirement is in line with the General Data Protection Regulation, the GDPR, which is applicable in Europe. And that is what a lot of companies comply with respect to receiving that information from users or visitors to their website, as well as making use of that information. You have to then click and accept, give your consent for that data to be collected and processed. So that is one of the lawful basics upon which data should be processed. The other basic is what we call performance of a contract. And where you have a user who let me give you the e-commerce idea. So when you use an e-commerce platform, for example, and then you purchase something on that, you purchase something on the e-commerce platform. The e-commerce platform can then give out certain information to the logistics company for the purpose of them locating you and then delivering the goods you have obtained. So in that regard, that is the performance of a valid contract. So giving out that information to the logistics company for the purpose of locating you and delivering your package is not in breach of that requirement of the consent requirement, because that is done in compliance or in performance of the contract. So there are certain, so those are the two areas upon which data can validly be processed. The personal data can validly be processed. So how do you ensure that your system is sufficient and data protection areas are properly covered? You need to carry out what we call the data protection audit. So what the data protection audit really does is, a data protection compliance organization comes on board to review the entire system of collecting data and the manner in which you make use of that information, and then advise you on essentially what measures need to be taken to ensure the protection of the information you receive. And so this is something that has to be done on a regular basis. And in Nigeria, for example, you have to file a data protection audit report so that people understand, so that the regulators are able to oversee your operations and ensure that you are in compliance with data protection regulations. So that's with respect to data protection. Let's go on to KYC compliance. Can anybody really just indicate what you understand by money laundering or anti-money laundering, as it were? Depends on how you want to phrase it. If you understand, just let us know what you understand by AML compliance or money laundering compliance. So yeah. So but let me just start with let me start while you're inputting your answers. So what is KYC or AML compliance? A startup has, of course, brings users on board to its platform. So there are systems, you have to put a system in place to safeguard your users as well as the business, or in line with regulatory provisions. KYC is basic. It's just the onboarding of customers, ensuring that you do some level of customer due diligence to know customer identification, to know who essentially uses your platform, to verify that they are actually natural persons. You don't have bots who come on your system to of course harass other users when it comes to social media startups or companies. But then in other instances, even in e-commerce spaces, you have to verify the identity of your customers to ensure that they are not using fraudulent details to transact on your platform, or they are not obviously using stolen credentials to make payments or purchases on the platform. Then down to fintechs, financial tech providers, you have to ensure that your system is not used as an avenue for moving illicit funds, which is where AML compliance comes into play. So let me just quickly go through essentially what KYC compliance is. So KYC is essentially the process of collecting and verifying the identity and credentials of a user or other third parties that that the company interacts with. Over the years, with the growth in the increase in internet fraud and scams, and of course illicit flow of funds, KYC has become much more important. And it has become not just to banks or to financial sector providers or financial service providers, but also to general companies who just deal with businesses, whether it's e-commerce or it's a social media platform or even a design platform. You ensure that there are identifiable people using your platform, and then you ensure that there is an oversight of the activities of these users on your platform. So, but of course, the KYC requirement is determined, is based on what industry, the startup plays in. So the industry the startup operates in determines what information it needs to obtain before onboarding a user. Yes. Then also in compliance with what we call with regulatory agencies, you also need to ensure that your KYC system complies with certain requirements. For example, online gambling services, online lending services, or data assets providers or digital asset service providers also have certain regulatory requirements with respect to customer onboarding. So what is the required KYC for? The basic required KYC you're talking about in here: name, photograph on an official document that confirms identity, residential address, or date of birth. When you're dealing with a company, there should maybe additional screening with respect to identifying, what we call the beneficial owners or controllers of a corporate entity. So you may then require additional verifications with respect to the directors, the shareholders of that business. So like I said, it depends on the nature of your business, and also depends completely on the nature of the clients or users you're onboarding technically. So what startups need to have an effective KYC system that protects not just the company from unforeseen risk, but also the users using the platform. Because an unreliable customer or a user which harasses other users of your platform or tries to steal information from other users on your platform is your responsibility. It becomes your responsibility to protect against such risk. So you have to identify and verify the user at first, then understand the customer's profile and then the risk associated with that customer, and then perform additional due diligence on that customer. You may then suspend the account and then say,
Once again, so sorry for this network ish.
Yeah.
He's back. Thank you.
Yeah. Yes. So your KYC policy allows you to assign risk, risk ratings to customers, and then it also then stipulates what decisions are to be made with respect to perceived risk on your platform. So that is how important a KYC document is. So with respect to money laundering and money laundering itself, money laundering is basically a system of masking the source of funds. That's as basic as it is. Just trying to prevent masking the source of illicit funds and trying to make them. This can be done in different ways. Obviously, loading them through a business, moving them through various accounts such that the trail of money becomes virtually impossible to trace. So a lot of all these things are being done on an ongoing basis with a lot of financial technology providers. You have some startups who have very lax KYC procedures where someone's identity could be stolen and used to open an account on their platform, and then the money is moved to that account and then moved out of the account. So once it's moved out of the account, that account is then closed. So you see a situation where where online banks or online or some of these fintechs are being used to transfer funds stolen from certain accounts by fraudsters. So that is where the AML compliance check comes into play. So I'll give you an instance really. So if a user registers on a platform and then the location is stipulated as Nigeria, and then you discover a login you discover that there's a login and then the location shows that the login was initiated in the UK. Of course, that automatically should throw red flags if you have a good AML compliance system. And then you can stop that transaction and then ask the user to provide additional verification that he is in fact the one who registered that account in Nigeria. Of course, you can ask him for his entry visa or his flight ticket that shows that he's actually now in the UK, just as an additional measure to ensure that it is the same user that is using that platform, or it's the same user that has initiated the transaction on the platform. So a lot of all this is something that needs to be put in place. Your AML compliance system has to be incorporated into the development of the product. So from the onset, you have to understand, okay, these are the attributed risks that could come from operating in this space, and then you have to then impute the AML compliance or the KYC requirement into that system. So of course, and then let's go through the AML checklist, which you want to go through to ensure that you are on board of the requirements. So once you get your AML provision, once you get your AML compliance system or documentation in line, you have to ensure that all members, all officers, the management team are aware and understand the AML requirements and the attributed offenses for helping a user move funds. We've had issues with banks where bank employees are complacent in helping people move stolen funds, and then of course even steal from other bank customers. And then we've had situations where the bank goes after them and then they end up going to jail for a while. So you have to ensure that your employees are aware of essentially what needs to be done with respect to verifying user's identity and verifying transaction. So it's a multi-layer thing. The customer support officer needs to know essentially what needs to be done, because they are the first line of action where a customer notices that there is a compliance check and the transaction has been put on hold. They reach out to the customer support officer, who then advises them on, okay, this is essentially why it has been put on hold. Then you need to provide this documentation. So when that documentation is provided, then it goes to another level. Then you have maybe a junior compliance officer who then vets the additional due diligence documentation before it then goes to a senior level, a senior member who then can sign off on additional due diligence, and before the transaction can then be completed. So there are also, as well as there are multi-layered levels of of tax in AML compliance, there are also multi-levels in decision making, such that for high-risk customers, only management team members or a management level officer can sign off on that transaction, so that there is a chain of command and then there is a chain of accountability. Point, understanding their roles and responsibilities in the compliance framework. Then, of course, stay abreast with changes and the latest developments in AML regulations. Aside from industry regulations or financial controllers regulations, in Nigeria we have the Money Laundering Act, which makes copious requirements for reporting financial transactions that are suspicious to the EFCC. But aside from all these specific territorial or jurisdictional regulations, we also have general regulations that that ensure that startups can ensure compliance with, such as the Financial Action Task Force recommendations. If you're able to scale through the Financial Action Task Force recommendation, then you are sure that, okay, look, it's very unlikely that we would have systems, or our AML system would not be able to oversee any risk that comes on board. So, and the Financial Action Task Force has different recommendations in that regard. They have the general financial recommendations. They also have the recommendations on dealing with digital assets, which is where cryptocurrency and the blockchain operators, Web3 guys, come into play. They also have to come into play and comply with the recommendations of the Financial Action Task Force in that regard. So you have to stay abreast of these developments, of the changes in regulations. But the next one, enforce robust and accurate policy controls and procedures that are effectively that are followed effectively and consistently. That also has to do with the accountability network, such as where there is a lapse in that system, there has to be some passive punishment across that line. There has to be some punishment across that line. So where there is a requirement for the filing to be done with respect to with the law enforcement agencies with respect to suspicious transactions, you have to ensure that that filing is done. And then if there is need for action to be taken further, then you have to assist in ensuring that action is done. Okay, then after AML compliance by establishing and monitoring a set measurable target to ensure effective compliance and performance. Yeah, this just has to do with regular audits of the entire process. So because there are new ways in which fraudsters come up with very ingenious ways to use online platforms nowadays, you have to keep abreast. You have to ensure that there is a system of monitoring and then rejigging the entire process. That's also the carrying out the timely and periodic. You have to be doing regular checks of the entire KYC and AML process to ensure that they are always in line with new risks that are coming on board and are being created by users and fraudsters themselves. So carry out timely and periodic due diligence on customers and necessary KYC checks. So yes, this is also a very important role. So where you see that certain transaction volume from certain customers, increases over time, then you discover that it then becomes necessary for additional due diligence checks to be carried out, for them to provide maybe a proof of funds, proof of investment, or proof of income to justify the substantial increase in transaction volume. That is also that's also a requirement, and it can only be done where there are regular and periodic due diligence on the customers. So you have to ensure that even email verification is done regularly to ensure that yes, we are still able to verify the identity of this customer, where the identification, the official ID documentation used to open the account is out of date or can no longer locate it on the system. You have to ensure that notify them and say, we need updated documents in this regard, an updated address. You need to carry out that regular customer information update system to know that yes, we have the most current system, and then we are still able to identify our users. So really all this, understanding these regulations and procedures, essentially makes you informed about the challenges that your business could face, and then implement effective risk management processes to avoid or reduce, this possible both internal and external risk from employees and also the sector regulators themselves. And yes, so that brings us to the end of our that brings us to the end of this knowledge sharing session. So there is a poll, there is an exit poll whereby you can also, you would answer questions which let us know whether you understand this training session. And there's also still a question and answer section after this where Mr. Adibare and myself will be available to take your questions and answer them. Thank you for your time. Over to you, Kingsley.
All right. Thank you so much, Mr. Adebayo, for such an enlightening session. It was very great. Thank you so much. A whole lot was shared. I would just like us to please complete the poll we are seeing on our screens now before we go to the next thing. That will be the question and answer. Just please complete the poll. Just click on the options that suits best, and that will be it. All right, thank you. Okay, we still have another one. Do you think fintechs should play a role in combating money laundering? Please, let's share our thoughts on this polls. Thank you. Okay. Okay. All right. Thank you. We're done with that. Okay. So we'll be going next into the question and answer session. I'm very sure that we have questions, and we'll take this up from there. So looking at the icon, so it will go in two ways. Option one will be either to use the question and answer icon on your screen, or you can just simply raise your hand. We'll unmute you and you can ask your question directly to either the raise team or the Crest All team. So I would start first of all with the very first question that we have here today. And it says here from Moreni Keji Onishi says, how does the ILO convention affect the employment agreement in Africa, specifically Nigeria?
Yes, let me answer that. It's it's a technical question. So I will break it down like this. Let me answer especially Nigeria. In Nigeria, we have a specialized labor court, which is the National Industrial Court. So the National Industrial Court Order Alteration Act, which establishes it, specifically allows the National Industrial Court to take cognizance of international best practices. So the idea is that conventions or protocols that have not been domesticated are not applicable in Nigeria, with the exception of that constitutional provision in the Third Alteration Act. So with respect to the National Industrial Court, there is no need for the domestication of conventions, of international labor conventions. So the court itself can take cognizance of a convention, whether or not it has been domesticated in Nigeria, in assessing employment situations. So, and I'll give you an instance. In Nigeria, before it was, you could sack someone without, you could terminate employment without giving a reason. By those website notice. But there is this recent judgment where the National Industrial Court has said that it is no longer in line with international best practices for employment to be terminated without cause. So where employment is to be terminated, there is now a requirement that you provide a reason for such termination in line with international best practices. So that there is technically, the NIC now has a very wide leverage in, in passing judgment in employment disputes. And they can take all kinds of conventions, protocols, even policy documentation that the ILO provides without the need of it being domesticated in Nigeria. And that is the position as it applies to Nigeria. So you understand why I'm saying that there is also the need to, aside from local, aside from the domestic and labor acts and of course pension acts with respect to employment relationships, you have to also take cognizance of international best practices and comply with those best practices to ensure that you are covered on all fronts. So yes, that's the answer to your question. And I know, obviously, and I know in South Africa as well. South Africa also has a specialized labor court, and they also take cognizance of ILO provisions as well, conventions in South Africa as well. So that's also, one has to be, you have to know essentially what the specific labor regulations of that jurisdiction entails, so that you are covered in that regard. And I'll always advise people, get a lawyer so that it advises you on these things. You don't necessarily. I found that there is no way you can keep track of all this information because you're building, you're working. But then, of course, getting a lawyer that is able to to ensure, or a law firm that has a lot of people cut across different areas that can help guide you appropriately is very important. Thank you. Any other questions?
All right. I think Moreni KJ has followed up with that question. Oh, okay. And sorry, just a second. Okay, she's asking what's the best practice in this regard concerning the remote job / employment.
Okay. With respect to remote jobs or employment, it's sort of tricky because there are instances where you see people not on board. Like we, for example, we don't technically onboard. We may not onboard someone as a full-time staff. It may just be a contract-based employment. So that person is an independent contractor, and such that the employment and the employment regulations will not apply to you. So things like payment of tax, contributory pensions will not be applicable to the company. What would happen is the employee will then be responsible for the payment of his own tax and the payment of his own pension if he wants. So all these requirements is then passed on to the employee specifically. So he's paid a lump sum, without deductions for tax or pay or pensions or health insurance, and then he can undertake to do that on his own. So that's one way that it can be done. But if the company wants to take it on board, there are some companies that usually have they have contact agencies, so these agencies oversee the employees in Nigeria. These agencies then they're third-party agencies which pay they pay the taxes, they pay they do the contributory pension schemes on behalf of the employees, they do the health insurance payments as well on behalf of the employer, and in favor of the employee, just in the event that the employer themselves do not have a physical presence in that jurisdiction. So that's also another way to get around it. So you just have to be creative in going around these requirements. So you may decide to, where you cannot have a physical presence and that, complying will be too expensive, you could have that understanding with the employer that you're coming on board as an independent contractor on a full employment status, and these are the terms upon which we are onboarding you, so that the compliance is then shifted to the employee specifically. So it's all a matter of back and forth in negotiating the onboarding.
All right, thank you so much. There's also another question here from D. Ita. D. Ita says, can you shed more light on the area of managing employees across different regions and countries? What is the best approach?
Well, I think that's what I just explained. You have to, if you're able to get a third-party company to help you with complying with So if you're in Nigeria, if for example you have employees in Nigeria, and then you have 4 or 5 employees in Nigeria, then you say, okay, you know what, we can lump them together, and then when we look at the cost, it wouldn't be too expensive to delegate compliance to a third-party organization, to an accountant to file returns and to ensure compliance in that jurisdiction. Then that can be done. But if you feel you just one employee and then going through all that will be too cumbersome, you can then, in your employment contract, stipulate it there that you're coming on board as an independent contractor, not an employee, and then complying with deductions, tax payments, everything will be left to you in your own location. So then that can be done for very small things. So if it's just one person, 2 people there, that can be done.
All right, thank you. So as a confirmation to what you just said, Dita just wrote, he got what you just said. That's being creative. Thank you. Let me check if we have more questions. Okay, I can see. Okay, all right. Maybe you would like to ask your question to Mr. Adebayo and Adebayo directly. Would you please, you could just, okay. I can see something here again, okay. Just a second, please. Okay, this is from, just a second. Okay, there. Can you also touch on company stroke business data from customers required for a B2B startup to provide services? Are initial seed funding taxable? That's the latest question.
Okay. Let's make the first one, which is B2B info, customers business to business information. Okay, so with respect to business onboarding, there is, of course, the principles are the same with respect to verification, but then it's much more cumbersome for business to business situations. So when you're bonding, for example, let me use the race platform. When you're bonding to the race platform, you're required to give certain documentation. If you do not have, you have to provide your incorporation document. So that is your certificate of incorporation and then the particulars of the directors and shareholders. So that is the basic. That's a basic stipulation for business to business. That's just like getting someone's name and address, an individual's name and address. But then if there is a need for additional due diligence, for example, then you may need to get what we call a declaration from the shareholders that they hold it specifically for themselves. Because the truth is that we have what we call, we have shareholders that hold trust shareholders. So they hold the assets they hold the company, not on behalf of themselves, but in trust for other individuals who are trying to mark their own, their own identity, as the case may be. So there is a documentation, there is a trust documentation. So in that regard, you have to put up a formula for people to acknowledge that the shareholders do not hold these things in trust. Yeah, if possible, request for a duly sworn affidavit from a management team member that states that, or from a shareholder or director, that they do not in fact hold, nor does any shareholder or director hold their equity stake in that company in trust on behalf of the third party, and then they hold it personally. That's additional, that's with respect to additional due diligence, so that you understand that, okay, there is no other entity marking themselves in that regard. Then you may also need to carry out bank verification as well for businesses. So you may need to request for banking details, which you can then confirm with your personal bankers, or have the personal bankers issue a reference letter. The company's banks issue a reference letter, signed saying, look, we identify these banks, they have an account with us, and this is, so that at some level, you're not taking on board the entire responsibility. The bank in issuing that reference letter takes upon their own responsibility as well, in ensuring that the company is a fit and proper entity to carry on to use your platform. So that is additional, due diligence mechanisms with respect to businesses. So the same way we have that with respect to individuals, we also have that with respect to businesses. So let me just recap what I listed. Incorporation details, ownership verification that it's, of the shareholders and directors, and ensuring that they are not held in trust. Banking details, or bankers' reference letters from those individuals. And even things as far as domain verification, you can also ensure that if the domain used by or the web page used by the business is different from its registered, its incorporated name, there has to be some indication on that web page that it is in fact owned by that company. So things as broad as that can be implemented into the KYC system to ensure that you are dealing with a proper entity and there is no clandestine moves going on behind the scenes with respect to the business entity. I hope that answers that question. Then the next one, sorry, what was the next one again?
The next one stated, first seeds, are they taxable?
Okay, yes. So, it depends on the manner in which the funds are brought in specifically, and I'll tell you why. Capital generally, is not taxable, because it's not income for the company. It's just, operational cost. So you can come in, but then when of course you can take that in, and then at some point when income comes in, you then pay on profit. So tax generally is on on income and not on capital. But then there are also certain exceptions which people have to take cognizance of. When you're talking tax, you may not need to pay corporate income tax with respect to that, but there may be some other statutory fees that have to be paid. When you're increasing your share capital, you may have to pay additional stamp duties, on the increase of share capital because of that inflow of funds. If any portion of that income is to be used to buy back shares, for example, then you may need to take out withholding tax in that regard. So if it is to be paid to shareholders as compensation for diluting their shares, if a portion of that is to be paid, then a portion of that is paid out has to be taken as withholding tax and then paid off to the authorities. So it depends on essentially how it is coming in and what it is being utilized for. It then becomes income for the shareholders, and then tax needs to be taken out of that and then paid off to, as well as obviously the shareholders also paying their own personal income tax in that regard, aside from the withholding tax the company will be required to pay for the disbursement. So it depends on how you bring it in and what you're using it for. I think that is that.
All right. Thank you so much. I would not know. I'm just checking through the question and answer box now, and I've seen that we've been able to attend to all questions. But in case you want to ask Mr. Adebayo directly, could you please just raise your hand so I could unmute you? Please feel free to raise your hand in case you have questions you want to ask directly. You don't want to use the question and answer box. Do we have questions? Just, okay, I can see some. Okay, Chinedu. It just shows that this session is very, very insightful. Chinedu Okerengwo, sorry if I misspelled, has asked a question. It says, my question about B2B data was answered to an extent. Here's our use case. We process and analyze music company royalty data and payment and expense records for their artists. These are company data that would need to be provided by the business customer, in brackets. I am still looking into laws around this, but what are your thoughts around data compliance or data protections for this? So Mr. Adebayo, what would you like to share?
Okay, I'm going to answer this from the music exec angle. So, and if I understand your business correctly, what you do is process and analyze. I don't know if you disburse or you help collect and disburse. I don't know if that is also a function of what you do. But generally, when your customers, which are the music companies, you know, when they onboard artists, when they bring artists on board, the artist generally has to sign a contract, you know, which stipulates certain things, including but not limited to intellectual property assignment, the authority to collect royalties, as well as the authority to use their name, image, likeness for promotion and for other purposes in ensuring that the contract is validly done. So now, if the company that onboards you has already signed an agreement with the artist, you know, before, of course, using your platform, so then you're sufficiently covered by also ensuring that you pass on that compliance to the company. So there has to be a stipulation on your own platform to the company that every information that you put on your platform has been validly obtained, and that in fact have the content of any of the third parties information that they put on that platform to upload, use, and use it as well. If you also disburse royalty, there has to be they have to also stipulate that they in fact have the content of the third party to collect these royalties as well, or that they own, you know, the music compositions upon which they are collecting these royalties. So a lot of all these are just multi-layered, you know, affirmative statements from the company. You may not be able to deal with the artist directly, but you're dealing with the company. So the company has to then go through those loopholes with respect to what they are getting from the artist. So they have to, before they can upload artist data, for example, or likeness or whatever to another platform, they need to first have an affirmative consent from that artist to make use of their likeness, their image for a stipulated period. And they have to ensure that it's updated regularly. It may be for a limited period of maybe 3 years while the contract is in effect, and once it's no longer in effect, they have to notify you of any changes. So you could put it there that, you know, the information is valid, and they undertake to inform you of any changes to any of these conditions in that regard. You know, effectively pushing the burden on the company to ensure that they do their things properly. And then when you notice that when there are now complaints that, and of course, then there's also the liability issue, where they undertake liability for any false representation, you know, that they make to you. So where there are now liability issues, you can then push that liability to them, and then once they undertake liability and then they agree to indemnify, then of course it's now on that company to ensure compliance on their own end. And so if you in fact incur any liability because of their lax in compliance in taking adequate measures to obtain rights before they upload on your platform, then you can then go after that company for the cost of what your company has incurred. Chinedum, can you please confirm if you are fine with that? But I mean, alternatively, if you feel like it's something you really want to discuss at length, you can always reach out to us, and then we can, you know, advise you further.
If I may add to what Adebayo has said, what he's trying to explain is you do the Pontius Pilate treatment. You take a bowl and wash your hands off it and say, okay, so far you are giving us data. It is left to you whether you got the requisite consent for us to process this data. And if you did not get it, it is not our liability, it is your own liability. We are going to be indemnified. Simple as ABC.
Exactly. In simple,
thank you so much.
better sense.
Yeah, Adebayo just poured like just the surface in, like that's the final one. So I'm happy that Chinedu has confirmed that the question he asked and the response he got has been quite insightful. Happy to know that, Chinedu. All right, we'll still have more time. I just want you to know that the team here, both from the Crestol team and the Race team, are very, very strong professionals in this field we are talking about. So questions that you have, you could still ask them either by raising your hand or using the question and answer chat box, and so we can throw more light into it. Thank you. Okay. Would it be fair to say that, because I can't see any question anymore in the question and answer pool, and
sorry, Kingsley, I have a question.
All right.
Mr. Adebayo, you've been, I want to say, I have learned a lot today. I feel like it's a question that a couple of people would want to ask. They probably would have not asked. You said crystal attorneys. I think one Ifeoluwa introduced you as crystal attorneys. How can the participants today reach crystal attorneys, you know, to get like more insights? What do participants have to do to reach out to crystal attorneys?
Effectively, you can send an email to this person, to ife@crystal.legal. So when you send an email, I'll type it out. I think I'll just type out the message. You can send an email to yes, and Mr. Drobelo would respond to your query, or if he cannot, would direct it to any appropriate person. So that's his personal email, so that you can reach out to him personally.
All right. Please feel free to reach out. I would like to invite Ozzy Chi from the RAISE team to continue with this. Ozzy, over to you, please.
Good afternoon, everyone. Thank you so much, Mr. Adebayo and the rest of the Crest Hall team for this really insightful session. I feel like I'm so much wiser now, and I would definitely be able to comply when I start my company. Okay, to dive quickly into the next agenda, to the next point of our agenda is sharing information on the next steps. Now that you know how to be compliant and you know what to do to make sure your startup is compliant, we're going to be giving you tips on how to ensure that you have a clean cap table, right? As you know, RAISE is your all-in-one equity stack for Africa and African startups and African companies. So basically what we do at RAISE is we ensure that our clients have a very clean and updated cap table. Now, why is a cap table important? Your cap table is important because it shows you who owns what in your company. You can think of your cap table as your one source of truth for making financial information, for taking financial decisions for your company. This basically means that if your cap table is incorrect, you cannot accurately make accurate decisions, financial decisions for your company, especially when you're about to raise, when you're about to have a valuation for your company. We did a valuation workshop sometime last year. If you would like to also get the recording for this workshop and the previous workshop, you can just indicate in the chat box and you'll be receiving one of those. So now going into the agenda for this cap table, let's describe what a cap table is. Your cap table basically shows you the information details in your ownership information details of your company. Now, keeping a clean cap table means that your company is investor ready. This basically means that your company is ready for investment from an external investor. Without taking too much of your time, I will just keep telling you more details about this. Now, another thing you need to know is it's not very easy to maintain a cap table, especially if you're not a financial professional or a legal professional. As we've mentioned before, Mr. Adebayo touched on this a bit while he was describing taking us through the knowledge sharing session, right? So maintaining your cap table can be difficult because, of course, your cap table is your company's entire corporate structure detailed in one place. And also, on the other hand, your cap table is basically how you know whether or not you can raise money, because, of course, you can't raise money without a clean cap table. It's like saying you've documented that your company has 50,000 shares, when really it has just like 25,000. So imagine doing a raise with an inaccurate cap table. It's actually a disaster waiting to happen. And of course, no founder wants this to happen to your company, right? Now, usually for this problem, a lot of startups wait until it is too late for them to solve this problem. This means that they either make the decision to clean up their cap table way down the line. So let's say they've already raised twice, or they've already done a previous raise. And of course, they get to the position where they realize that, wow, our cap table information is inaccurate. This means that you could lose control over your company. Of course, this is a big nightmare for you, because you've worked hard, you've worked with your team to ensure that your company and your product is working perfectly. The last thing you want is for an investor to come in and take ownership of your company. And of course, you don't want to have to pay expensive legal fees to correct the mistakes that have been made in the past. And of course, which will slow down your investment process, because a lot of documentation work is going to go into correcting these errors, right? So this is where Raise comes in. Now, with the Raise platform, you can supercharge your cap table. This basically means that we will help you save time and money for your growing African startup. And it also means that you can automate your legal diligence and speed up your fundraising process. How could this possibly be? Now, with the Raise platform, we basically automate your entire cap table, right? So instead of thinking about managing your cap table manually, entering figures, removing details and making corrections manually, we have a platform that will calculate all of this for you automatically. So you're basically going to be able to manage your cap table. You can automate your due diligence, meaning help your company get investment ready, and of course, even get evaluation for your company and create something which is really cool, which is employee stock options, and basically make it possible for your employees to do their stock vesting. In addition to this, we've also created a founders toolkit for our founders, African founders, basically. It's basically just a toolkit that helps you know you can think of it as your starter pack as a founder. And we've put this together to make it really simple for founders to be able to get fundraising ready and investment ready. And with the Raise platform, you're able to go live in minutes, meaning that we're able to help you get onboarded on the platform quickly with our team of lawyers, of course, and our very, very capable partners. An example is Crystal Attorneys. You've already seen them show their expertise here. So when you come on board to the Raise platform, you can be rest assured that you are 100% ready to, of course, fundraise, to have your cap table cleaned up, and of course, have an effective and pure one source of truth for financial decisions for your company. So of course, you can go ahead and get started with this process. Just sign up at Raise by going to our website, getraise.io. And of course, you can also reach out to our partners to ask them questions that you have about, legal questions and legal compliance. And of course, also ensuring that your cap table is cleaned up by visiting our website and creating an account. And you should know that our team of customer success team is always ready to offer you support with everything you need to ensure that your company is 100% compliant, and also you have a very clean and accurate cap table. So once again, thank you for participating in this workshop. We're so happy to have you here. Thank you for joining in. Of course, this workshop would not have been possible without you. So yeah, thank you for joining in. So I'll just hand over to Kingsley, our awesome host.
All right, thank you so much, Ozichi. That was very short and brief. Thank you, everyone, for taking out time to join us today. And I'm sure we are definitely excited to get so much from this call today. And so a poll will be coming up very soon. Just before we leave, I would like you to please send your feedbacks via that poll. And don't forget that you can always reach out to the Crystal team and the Raise team at any time. Yes. All right.
Actually, it's just a link. So just click the link that's been sent in the chat box and give us feedback about the workshop. One more thing before you go, please, if you would like us to treat another topic in the future, in our next upcoming workshop, kindly just share with us what you like to learn about in the chat box. Any topic you think of, we would also definitely treat this if this is a topic that we'll be able to cover. And of course, if you have any questions, just feel free to reach out to us in our, through this email, community@getraise.io. Once again, thank you so much for joining this session. It was really, really awesome having you here. Of course, this workshop would not have been possible without you. Thank you.
Please don't forget to click the link on the chat box. Thank you. Very important.
Thank you so much for your participation. Have a good day, everyone.
And you too. Thank you.
Okay, I guess we can call it a day. Have a good day, everybody. Thanks so much for your efforts, the Crest Hall team, Mr. Ife, Mr. Adebayo, and Mr. Adibari. We really appreciate your support. Thank you.
Thank you too. Yeah, take care. Yeah,
Have
bye.
a good day. Sure. Bye.
Have a good day, everyone.
Bye.